All right, good morning. Sorry, Jose, I wasn't yet. I was setting up the YouTube feed so that we could share this with the world later. I'm on now, though. Good morning. Good morning, Mike, David, Ron, John Novak. Can you guys hear me now? Everybody good? No, that's okay. Good morning, guys. It's nice to see you in here. Hope everybody's doing well. It is right at the 9 o'clock hour, so we'll give it just a second for people to come in before we get into the super smart stuff. Um, Man, I wanted to share something with you guys. This is kind of cool. It's not part of the curriculum. This is me doing things on my own. But I was doing a little research. Do you guys ever do this? How do I know I'm getting close? How do I know I'm getting there? This was kind of cool for me. Just 6 signs that you're maturing as a trader. I like to Google a phrase like this and then look at 5, 6, 7, 8, 9, 10 different sites and look and see what's congruent. Like, what is the common theme? And one of them is managing risk, and then you manage your reward. You look for that statistical advantage, and then you worry about the profits. You protect your account, right, so that you can grow your accounts. And that's something that we do in this classroom every day, right? We talk about the perfect entries. We talk about the advantages. Completely relaxed when making trades. That calm feeling when you know the advantages are present, guys. This is something that took me a while to get into. To stop having those sweaty palms, to quit fidgeting with my screen mid-trade. Don't force or chase trades. You guys that are patient, you guys that are waiting, and you really have this mentality. You know what? If it's not perfect, it's not mine. If my rules aren't met, it's not mine. Hey guys, this one was pretty big for me. Trading's not your daily adrenaline fix. You're not doing this for the rush. The rush should be absent. You're doing this cold and calculated. You're doing it to make money. Can anyone hear me? No? Let me reboot on my end. All right, guys, are we back? Can you hear me? Nope. Okay, hold on. Oh, Mark SP, you can hear me? Guys, if you can hear me, give me a Y. It's not always on my end. Nobody? Okay. All right, guys, can you hear me? I'm trying to be back now. I just did a full reboot on it. Hopefully that helps. All right, good morning, Safia. Guys, give me a Y in the room if you can hear me now. Am I back? Nobody still? Yep, David, you got me? Okay, cool. Sorry about it. I'm not sure what happened. I just decided to boot me. So guys, and again, this isn't part of the curriculum. This was something that that I just was doing a little research, a little extracurricular on my own. Not your adrenaline fix, guys. Following your trading plan. Notice that that's one of the signs that you're maturing as a trader. The less you deviate from your plan, the more mature you are as a trader, without a doubt, because your plan's been proven, right? Your plan has been proven to win more than it loses. It makes sense to follow your plan. And I was having a conversation earlier today. I had a gentleman that is a very successful trader by trading regards. Tell me once, if you don't have a plan written out, if you haven't concretely put on a piece of paper what it takes to get you in and out of the market, well, then you don't have a plan. And guys, our brains are going to have us doing what we want rather than what we should. Make sure that you have a plan written out. You can always share it with me. I'd love to review it. And then finally, this one was a big one for me. I talk a lot about the language and the way we talk to ourselves when we trade. That you're worth as a trader and your worth as a person are two separate things, right? Don't let challenges as a trader create challenge, that emotional reaction. Guys, you're going to have good days, you're going to have bad days. It's going to be an emotional roller coaster. Make sure that you separate the two. One is your business and one gets to be you. So I just wanted to share that. I thought it was kind of cool. And if you Google signs you're maturing, those were the common themes that kind of showed up across the board. Just something to think about. Feel free to look at it. Where are you? Where are you in your trading? Look and see what boxes you can check and which ones you need to work on. And then it gives you an opportunity to work. I see Discord just bumped me out again. I'm on my way back. Usually you can hear me from the great beyond. Here I come. Gonna be one of those days, Discord. No worries, guys. If this is as bad as it gets, I'd say we're still doing pretty good, right? All right, here we go. I should be up. You guys should be able to hear me. Let's get this day going. Let's start talking about stuff. Each and every morning, guys, forexfactory.com. This is where I go to look at news. This is where I'm making sure that I'm not trading into what could be an emotional response. I'm not really concerned about what the news is, though. Wasn't that interesting, Jose? I do this about every 6 months. I start Googling what is. Am I becoming mature? Am I doing it? And I think chasing trades is one of the biggest ones. That's probably the biggest takeaway for me on that one. Is when you stop looking for everything and you start looking for your trade. That's that maturity piece, I think. Guys, forexfactory.com is going to let you know when news releases have a high impact on the market potentially. Could make it jump, spike, bounce, be too fast to recognize the patterns that bring you success. Medium impacts can do the same. These low impacts have the potential to move the market, guys. So all we're doing is we're creating an awareness of when those announcements are coming. I'm not worried about final wholesale inventories. It doesn't matter to me what the actual number is. I don't trade natural gas, so it doesn't matter to me what the number is. But if you're a natural gas trader, this is great to know that that's going on because it may create a response. And this is just part of my morning routine. Getting up, my charts are loading, I poured a cup of coffee, and I'm checking news. I'm making sure that I know what's going on. And then for you guys, I turn over to the education page, and this is where anything and everything that I talk about comes from, guys. Every rule that I discuss, what that rule looks like, the things that provide advantages. And I'm going to take this opportunity right in the morning just to remind you guys what your path is, or what your path should be if you want to follow the footsteps of the same people that have found success with the software and their trading, guys. This is what they did to get there. And this is something that I stand behind 100% as the best path. And it begins with posting your trades in class, guys. Everything that you do, win, lose, or draw, show me what you're doing. Let's talk about the advantages. Let's look at your rules, right? Let's make sure that you're following rules. And what's going to happen is you're going to recognize through repetition things that are bringing you success, things that are giving you challenges. I'm going to recognize through your posting patterns in you. Maybe you are a rule breaker in regards to termination conditions. Maybe you're a rule breaker in regards to momentum. We're going to identify that, and we're going to talk about the advantages that you're having and maybe losing. And I'm really good. It annoys my wife. I don't forget a thing. So you may post something, you may say something, guys, and we're going to talk about it 6 months from now because it refuses to leave that brain of mine. The next thing is posting your trades in a spreadsheet, guys. I share my spreadsheet every day with you guys. This is provided to you by Nexgen. You can find it in the education materials. But this spreadsheet is 2 parts, guys, and the idea isn't for you to take mine and say, cool, now I have all the information I need. The idea is for you to build your spreadsheet, to create a trade journal. The first page, every trade you take, guys, every time you take a trade, it goes into that spreadsheet. Win or lose or draw. Rules met, rules broken. It doesn't matter. All you're doing is you're creating this database on your trades. You're tracking And what happens is when you start filling these out, the trend trades, whether there were no rules, how did you feel? Remember, feeling relaxed is one of those signs of maturity. And that feeling of relaxed comes from following your rules, from recognizing, trusting the advantages. Um, Looking at the conditions, and I think that this notes section allows you to know and allows you to record, hey, I broke my rules and I lost this trade. I followed my rules and I won this trade. I traded into a termination condition. It took my money. You're going to begin to recognize patterns in yourself, things that you're doing, maybe unconsciously, that are sabotaging your results. And when you post it in the room, I'm going to recognize those patterns. When you post it in your spreadsheet, you're going to begin to recognize these patterns. But the idea isn't to fill it and then just leave it alone, guys. You have to use this tool. Every morning, study the trades that you did yesterday. If you looked at what you did yesterday and you had to rate it 1 to 10 on following rules, where would you be? Guys, most people might be around an 8. Maybe you're a 6 that day because you were breaking rules. Go back and study it. What worked for you? What didn't work? What felt easy? What helped you relax? What felt forced? Which trades made you nervous? Was it the trades where you gave up the advantage of momentum? Were they the trades where you traded into termination conditions, hoping that they broke? And a brief historical study each morning is going to prepare you for the day. And guys, this will accelerate the learning. The more you pay attention to what you've done, it's going to positively influence what you do. So using that spreadsheet, that's your first page. That's your trade journal. The second page, and the one that I want you guys to steal from me and then build and add to it and make it yours, are the personal trade setups, guys. And these are nothing more than rules-based entries. That's it. It doesn't talk about management. It's just rules-based entries. I'm following my plan. I'm taking the advantages, and I'm turning them into that high probability trend trade. As I grow from entries, I may work on management, right? Because every great entry creates a manageable trade. There's something to do with that trade. Once you're in, you've got to figure out whether you need to stay in, whether you need to hold longer, get out sooner. And that's the second part of the puzzle, guys. We're going to focus heavily on entries, and then you'll begin to learn to manage those trades. The market presents patterns every day. You're going to see the same thing every day, guys. It takes you a little bit to recognize it, but you're going to start watching your charts and you're going to say things like, oh my gosh, I've seen this before. I remember this look. When you have that aha moment, drop it into your chart reading things, guys. These patterns are important and they create advantages. And then there's a whole section on termination conditions, those areas that may stop the market. Guys, I lovingly refer to this as the Mark Novak section, because this was my Achilles heel when I started with the software. Is if there was a termination condition, I would find a way to trade into it. And it hurt my chances of winning so dramatically that I began filling out a section just so that I could recognize termination conditions. So this is available to you guys. If you don't have it, look in your Nexgen Study Picks folder. And if you don't see it there, guys, here's a link to get you to it. All you have to do is download it, put it on your computer, but start that process of filling it out. Make sure that you're using this tool, because once you're using that tool, you're going to get to where you want to be just a little bit quicker. So you're going to post trades in class just like Mike M did, right? Show me what you're doing, tell me why you're doing it, annotate that chart. You're going to put that same picture into a spreadsheet. Make sure that you can study it tomorrow, right? If you're finding success, don't you want to be able to repeat that? This morning in the first hour, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. Guys, there are a million looks in the market. There are a million patterns. There's probably a million different ways to get into the market. We're going to focus on a high probability trend trade primarily. We're going to focus on a trade that has every advantage on every chart. We're not fighting anything. We're going with the flow. The path is clear. Nothing between us and our targets, guys. We're going to keep it simple and do our best to make it easy in the beginning. And we're going to talk about those advantages and that high probability trend trade in the first hour. Your job is to simulate, right? No risk of loss or capital. Because you're on a simulator. All you're doing is you're practicing, making sure that you have the correct rules. You won't know if you have the correct rules if you're brand new unless you post that picture in the room, guys. 15 hours every week live. I'm here to give you feedback on anything and everything that you do. And it's really pretty easy. You post it in the room, and I click on your link. And I look at Mike's trade and I say, hey, Mike, you had great momentum, right? And we're going to talk about this momentum look. And you had small triggers through the area, but the large weren't, and you recognized that this was an area with the potential to break but hadn't yet broken. And Mike took the perfect entry right in an area inside of favorable large triggers. And because he recognized the momentum and he uses Fibonacci, he could understand where the market was likely to go and took an absolutely perfect exit at support. And then I'd say something clever to Mike, hey, you know what? No reason to hold that second contract so long because you reached an area that may stop the market. And he said he doesn't know what happened. The chart was not set right, not moving. You got kicked out. Mike, what may have happened is you had moved it and hidden your chart. Guys, have you ever done that? If your chart isn't moving and it just appears to be stuck, there's a white arrow in the upper right-hand corner. Bink, it'll get you right back to the most current. And you know that you're the most current because of that black. It'll show it. So if it's ever missing that white arrow, if you ever accidentally slide it this way, it becomes a transparent arrow. If you ever lose it to the upside or the downside, there's a capital F. It'll bring you right back. So guys, this is why we're posted in the room. Mike's showing off an absolutely beautiful winner. Perfect trade, absolutely beautiful. We'll have conversations about taking profits at the key areas because you have the advantage of knowing where the market is likely to go, and it turns into a conversation about scrolling charts, something that maybe everybody needed in the room. So nice timing, Mike. Beautiful trade, by the way. But that's the plan. Simulate it. Make sure that you're following rules. And guys, simplify. Can't stress this enough. Let it be easy. The high probability trend trade is a trend trade that typically wins 70 to 80% of the time when you follow the rules. We're going to discuss the rules in great detail. I'm going to give you checklists to make sure that you're following. I'm going to show you pictures of all the conditions and what they mean to be met. Let it be easy. Be really good at one thing and then branch out and maybe look for other trades, guys. And go back and use that market replay function. You can go through and you can literally replay the day, fix your mistakes, skip the trades that you shouldn't have taken, take the trades that you should have taken. The idea for market replay is to see the potential of your solid plan, your trading plan that has been proven through study and back testing to win more than it loses, guys. That's what you're doing on market replay. Very strict adherence. And you're able to do that because every time before you enter a trade, you can hit pause. You can hit pause and you can go to the checklist that I'm going to share with you guys and say, do I have my rules met? Are the advantages in place? Is my entry in the right spot? And if it is, well, then you just hit that play button and you take that trade and you look at the results. Take pictures. When you take the correct trades, guys, take pictures. Fill that spreadsheet. Create such a database that the repetition creates confidence, creates trust, and repeat that process every day until you're always taking the correct trades. Guys, this is your path to get you where you want to be. Many of you are going to fight it. You're going to say things like I said in the beginning. Well, taking a lot of pictures sure feels like a lot of work. I don't want to do that. Using that spreadsheet sure feels like a lot of work. I don't want to do that either. Why on earth am I going to post in class? What if I'm wrong and he tells me I'm wrong? Oh my gosh. And guys, that goes back to that. Your worth as a trader has nothing to do with your worth as a human being. If you're making mistakes during this process, then you are right where you need to be in the process. It's okay to make mistakes. It's okay to be wrong. And guys, more than anything, give yourself just a little bit of grace here. It's okay to be new. You're in your first class, freshman year in college. You're going to be an engineer one day and do great things, but you got to get the basics down. You got to build that foundation. So make sure that you're giving yourself time to do that. And the easiest way to do it is to focus on one trade that wins more than it loses. One trade that creates advantages, guys. This is your high probability trend trade, and this is a trade where every chart agrees for the trade. Your triggers are the strongest, rule number one. There's nothing in your way, rule number two, and you're getting in at the area where the market is likely to continue, rule number three. Three very simple rules that create three advantages. Guys, these three advantages come to fruition on two charts. That's it, two charts. You don't need an hourly, a daily, a monthly. You don't have to look at the news and see what Bob said about the S&P's state of affairs. You need two charts providing three advantages, guys. Your large chart is the general consensus of the market. It's that large crowd opinion. You're going to use the large chart to identify the direction. If the background on your large chart is green, guys, you are in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. As a brand new user, give yourself the advantage of trading with the trend, guys. And then ask yourself, if you've been doing this for a month, for 2 months, look at your trades. How many mistakes could you eliminate if all you did was trade with the trend? For me personally, I could probably eliminate more than half the mistakes I make. When I break a rule, guys, it's a trend-breaking rule because I've created an opinion on the market. So I'm going to share every picture I own with you guys this morning. Let the trend be your friend, guys. And then you're going to define momentum. And this is rule number one for a high probability trend trade. Making sure that you have those strong trigger lines. This happens on this larger, slower chart. You're also going to define your areas. The areas that may hold, the areas that may break, the areas that may reverse the market, guys. And all this is a broad stroke of a brush. This is like your generalization. You're painting the living room and you're taking that big roller over huge spaces until you start to do that detail work around the windows, around the plugs, guys. Rule number one, the momentum and the clear path must be met. And when they are, turn your attention to your small chart. Guys, what happens in one bar on your 13.2 on your large chart is going to happen in 15 to 30 bars on a small chart. Your small chart allows you to refine that broad stroke, and you're going to pinpoint where the market is likely to continue. This is going to be your entry point. Your small chart is an entry chart, guys. You're going to be able to increase your profit potential. You're going to be able to reduce your risk. And you're going to be able to do this with only two charts, right? And you're going to be able to do this with only three rules. So I'm going to put these pictures in here. Guys, remind yourself every morning that you're going to keep it simple. Remind yourself that the path to success doesn't have to be a complicated one. Here's your two pictures. There's your rules. There's your chart. And guys, the great thing about what we're doing right now is when you learn this rule, when you get this high probability trend trade, when you understand the advantages and the rules, it's not only going to give you that trade that wins more than it loses, but it's going to teach you to be a chart reader. And 90% of what we do during the day is really just reading charts. 90% is looking at your indicators and waiting for those three advantages, waiting for the momentum, waiting for the clear path in that entry area. Guys, you're going to be able to look at your charts and in a matter of seconds understand where the market is likely to continue and use that point for entry. You're going to understand where the market is likely to go using Fibonacci and momentum and using that point for targets, and then you're going to understand where the market is likely to stop. And these likely to stop areas are what we call termination conditions. It may terminate the trend. Guys, this is a giant red flag telling you, hey, the trend might be over. This is a great place to take profits. Or the trend is done. The market is reversed from this key area, and that becomes your anchor for the highest probability trend trade that we teach, guys. The 5-1 chart, that small chart trend trade that happens after a termination condition on the 13.2. I always encourage people, let this be your first 20 trading days, guys. Your first month with Nexgen. Focus on this highest probability trend trade. Focus on these three rules that happen on two charts. Learn to read your charts, and it's going to open doors for you, guys. Once you can read your charts, you're going to be able to move into the medium probability trade. This is all my adrenaline junkies that need to be busy. A medium probability trade is defined when most indicators line up for a trade, however a small issue exists. We're going to talk in great depth about your first medium probability trade. Your ability to read a chart is going to identify the trouble in your way, guys. And ultimately, this will be the vast majority of your trades. When executing medium probability trades, you're going to take these trades and manage them assertively. Your ability to read your charts is going to allow you to manage assertively. If there's trouble in your way, once again, I sound like a broken record, your chart reading is going to identify that trouble. You're going to be able to maybe take a portion of the position off at that trouble, reduce risk to a zero loss level. Your medium probability trade is something that you will work into your plan, but you should work it into your plan when you have become proficient at the high probability trend trade, when you recognize these great entries, right? When you identify these advantages. Let it be sequential. Walk before you run. And with that being said, let's go through. Let's identify the recipe for a trade, which is nothing more than momentum, a clear path, and an entry area. And then, guys, I'm going to give you looks straight from the resource material so that you can understand what you're looking for and recognize advantages. And it all starts with the T3 trigger lines. There's two parts to a trigger line, or two separate trigger lines. Guys, there's your small triggers. These are the solid lines. These are the faster moving indicator. And there are the large triggers, those dashed lines. And when we're looking on the 13.2 chart, the first thing these trigger lines are going to do is help you define the trend. When the small, faster trigger crosses above the slower, larger trigger, the background color is going to turn green, guys. It's going to let it click in your brain that you're only looking for rules to be met for high probability trend trades long. When those small triggers go below the large triggers, guys, it's going to paint the background red. It's going to have you looking for rules to be met for high probability trend trades short. You don't even need to know why it happens, but this is how you identify the overall trend of the market. Rule number one says that we must have strong triggers. Strong triggers are easy to recognize. It simply means that your small triggers have crossed up and above the large triggers in an uptrend. It means that both trigger lines are crossed up and wide in the angle of the trend. The space between the small and the large, guys, lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a key phrase you're going to hear in class every day. And when you identify on your chart your momentum, you can use OFM, odds favorable momentum. In a downtrend, small trigger lines below the large trigger lines. Large trigger lines are wide. They're angled in the direction of the trend. Guys, this is your best look. This is that strong trigger line. The odds are favorable for the market to continue down. When you have odds favorable momentum, guys, this is when you have the highest advantage for buying or selling a pullback on that smaller, faster chart. As the trigger lines begin to return to the large triggers, the smalls work their way inside. This is a weakening of the large triggers, guys. I like to refer to this as anything can happen up or down. You've given away the advantage of momentum, and momentum is the first part of the equation, guys. When anything can happen up or down, you've lost that advantage. And I'm going to share this picture. This is my rule number one picture, guys. Steal it. Put it in your chart. Put it in your spreadsheet. You'll notice that odds favorable momentum doesn't happen all the time. Sometimes you have it. Sometimes you have anything can happen triggers. I like to point out that these anything can happen triggers seem to happen right before a reversal in the market, when that market is likely to reverse, right? But when you have that odds favorable momentum, it tends to move in the direction, guys. There's one of those potential entries with odds favorable momentum, taking that market up to your profit point. Anything can happen. The market reverses. It produces odds favorable. There's that tail. The market continues down. You're going to see this throughout the day, and you're also going to see, we saw this yesterday quite a bit, when the trigger lines don't agree. Maybe the small are up and the large are down. Maybe your background is green, you're in an uptrend, but your trigger lines are red. These are these moments of indecision, guys, when buyers and sellers, these deep pocket institutional traders, are trying to fight for supremacy, to create that trend, to create that momentum. Next-gen users, with the simple incorporation of Rule 1, you're not going to get chewed up in these indecisive moments. Because if you're committed to following the rules aren't met. You're going to sit on your hands and you're going to wait for that odds favorable momentum. What that's going to do is that's going to create that advantage, that first step in finding a trade. So I'm going to ask, got 43 of you in here. I know some of you are new. Is everybody comfortable with the look? It's pretty simple. The space between the small and the large lets me know that the momentum phase is in effect, that I have odds favorable momentum, that the market is likely to continue in the direction of the trend. This is the first advantage, traders, of finding that high probability trend trade. And you don't have to say yes. I'm going to go through this no matter what. So Fibonacci, tops, bottoms, termination conditions. Guys, rule number 2 says that we must have the advantage of a clear path, right? What is a clear path? A clear path means that there's absolutely nothing in your way, nothing to stop that market, no points where the market is likely to reverse. No termination conditions. A termination condition is nothing more than an area that may reverse the market. Your areas are pretty easy to define. They can be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots. The areas that may reverse the market may also be a divergence high line, a magenta line that prints from a pivot that's losing momentum, or a divergence low line, a divergence line that prints from a pivot that's losing momentum, guys. These are the areas that may reverse the market. These are the areas that should be that giant red flag. And it's a simple process of recognizing whether or not we've reached a termination condition or haven't. And it's a two-part process. The first thing that has to happen, guys, is price reaches an area, meaning that these red dynamic Renko bars work their way down and go right into Fibonacci support. When price reaches the area, you ask yourself, where are the trigger lines? If all the trigger lines remain above support, we've reached a termination condition. Rule number 2 has not been met. And because rule number 2 has not been met, guys, we're just going to sit on our hands because we don't have the advantage of a clear path, and we're going to wait for that clear path. The path is clear when both the small and the large triggers get to the other side of that key Fibonacci area. So if the market trades into support and all of the trigger lines remain above, no trades, rule number 2 hasn't been met. If both the small and the large get to the other side of this area of support, you can see that it begins to behave as resistance. The path is now clear, and with that odds favorable momentum, we're looking for that pullback to finish the move to the next key area. Guys, there's really only 2 ways to look at termination conditions as a brand new user. Either the path is clear or it is not. Price reaches resistance, absolutely no trigger lines break through, guys. There is no clear path, there is no high probability trend trade. Both the small and the large break through the area of resistance. It now behaves as support. The path is clear. The momentum is odds favorable, guys, and there's another one of those tails, one of those potential entries to get you in at the best of the best spot where the market is likely to continue. Is everybody comfortable with this? I know I've got the new people. Don't be shy. It's either broken or it's not, right? Triggers through, triggers not through. Guys, 90% of what you do during the day is going to be reading indicators. 90% of what you do during the day is going to be waiting for advantages. I want to talk about using a divergence low or a divergence high, guys. When this pivot forms and this divergence is true, this is not a termination condition because price hasn't reached the area. Remember the recipe. But when price comes back to this divergence low, price reaches the area, all of the triggers remain above. Now we have what's called a termination condition. And guys, when a termination condition creates a full reversal, we have what we call a strong bottom. This is the precursor for the highest probability trend trade that you can take. You'll see it go in the other direction. Price reaches resistance, no trigger lines break through, no long trades, keeping you safe, keeping you out of harm's way. Price pulls all the way back to support, no trigger lines have broken through. Once again, 90% of what you do during the day is simply waiting for these advantages to be present. Price pulls back up to resistance and the divergence high. None of your trigger lines are able to break through. Guys, we have one of those pivot stop outs once again of a divergence high. We also have two forms of resistance. And guys, this ultimately reverses the market, gives me odds favorable momentum. This termination condition that creates a full reversal is what we call a strong top, guys. This is the precursor to your highest probability trend trade. Price reaches support even with odds favorable momentum. Guys, this is your big waving red flag. Hey, don't take this trade. It may reverse the market. It keeps you safe. It keeps you out of harm's way. Guys, when this termination condition creates the full reversal, this full reversal puts the small triggers above the large triggers. There's another one of those tails. That's your highest probability trend trade. Sometimes the market turns from nowhere. You have a clear path. Sometimes you even have a clear path and odds favorable momentum. I'm going to show you guys one more termination condition that doesn't happen on the large chart first. You're going to see this on your smaller chart. You're going to see it on your entry chart. 3 divergences on a small chart may reverse the trend, guys. Divergence is a loss of momentum. There's a lot of calculations going on in the background. But this loss of momentum, when it happens 3 times in the same price range, it might terminate the trend. It becomes even more powerful when your small trigger lines work their way from outside of the large triggers to inside of the triggers. Remember that anything can happen. Look, from rule number 1, we're no longer strong momentum. We are 3 losses of momentum and a visual look that says we're losing it even more. Becomes more powerful. When that third pivot is higher than the previous from a low, lower than the previous from a high, price can't match, divergence is waning. Guys, this is a head and shoulders pattern. It adds even more fuel to the fire. You're going to see this look on the 5-1. This is going to be your indication from a low or from a high that your higher time frame might be taking a turn. Guys, you're going to recognize this, and this is really, and I want you to write this down somewhere, this is the only termination condition that I'm looking for on a 5-1 chart as a high probability trend trader. 3 divergences may terminate the trend. Guys, 3 divergences is also going to help you manage those medium probability trades when you move into them. If you're in a trade, if you're in a short position and you see 3 divergences, guys, you know that you need to exit that trade, that the momentum is changing. It's going to allow you to take small profits, get out, break even. It's going to allow you to turn large losses into small losses. It's going to allow you to take profits at trouble spots. So this 3 divergences is something that you're going to want to recognize as you go through and see the market. When it happens on a higher time frame, you can typically expect larger moves. Maybe your large chart has 3 divergences in the same location. They line up with Fibonacci resistance, guys. That market's likely to push just a little bit lower. I'm going to ask if you're comfortable, guys. It's up to you to tell me whether or not you are. Is everybody good with odds favorable momentum? That thing that gets all the wheels in motion, looking for a high probability trend trade? This is what's going to start the look, guys. No matter what kind of trade you take, momentum is advantageous. Rule number 2 says have a clear path. No termination conditions. Guys, don't trade into areas that are likely to stop the market. You have Fibonacci, right? And guys, you're going to be amazed at how many times these termination conditions stop the market in their tracks. If you go back and do just a little bit of study, even in the middle of the night, price reaches resistance, trigger lines remain below, and that market continues down, right? Almost to the tick, Fibonacci resistance. Triggers don't break it. Market changes direction after a huge push up that came from an area of support that the trigger lines didn't break through. You're going to see this over and over throughout the day, guys. Your job is to learn to recognize it. I'm going to give you 2 more cheat sheets, guys. Here is a visual of termination conditions at a high. I spend the most time on termination conditions because this tends to be the most broken rule. Here's one of those divergence highs. It's a pivot. It is not a termination condition. When price comes back and reaches that divergence high, no trigger lines break through. Now it's a termination condition, guys. These pictures have the recipe. Price reaches, triggers remain below. From a low, price reaches, trigger remain above. Take a minute, scroll back on your large chart. Begin to recognize these, begin to trust these. Not trading in determination conditions, having that clear path is a huge advantage, no matter what kind of trade you're taking. And then finally, once we have a clear path, right? Once we have odds favorable momentum, guys, this is the look on your smaller, faster chart. Your refinement chart and that uptrend when everything says go should have strong trigger lines. It should have that same odds favorable momentum that you expect to see on a 13-2. Small triggers outside of the large triggers. Your large triggers should be what we call favorable large triggers. And favorable large triggers mean that both your large triggers from the 5-1, those smoother large triggers, should be overlapped with what we call your synthetic triggers. Your synthetic triggers are these stepped triggers. Guys, these are nothing more than the large triggers on your 13-2, your large chart. So we just say favorable large triggers. But if they're one on top of the other, if they're angled in the direction of the trend, strong, that's your best look because it creates the smallest area where the market is likely to continue. The smallest area gives you the less risk, right? This is your look. And we're going to use a limit order to buy or sell the market. We're going to buy or sell a pullback at an area inside of favorable large triggers. That's rule number 3 defined. That's what's going to give us this entry area. But with everything going up, nothing in the way, we need the market to come back to our areas inside of favorable large triggers. And that happens when the pullback begins. A pullback is a small retracement counter to the underlying trend. So if everything is up, we want the market to come down. If everything is down, we want the market to come up. That pullback begins with a reversal bar. Reversal bar is your first red bar after all of these green bars, or your first green bar after all of these red bars. At the time of a reversal bar, you're going to create your window of opportunity. For a long trade, your window of opportunity is your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. Favorable large triggers are wide, they're angled one on top of the other. Your job, when you recognize the window, use your drawing tool, is to right-click on your chart and put a limit order right at the top of that window, and then sit on your hands. And the market's either going to come to you or it's not. You're not in control of that. But you have the advantage of momentum, you have the advantage of a clear path, and now when the market pulls down to the top of that window of opportunity, you have the advantage of having entered the market at the area where it's most likely to continue. Guys, the rules are met, the advantages are in place. This is your trade that typically wins 70 to 80% of the time. Managing risk is important, guys. Your initial stop goes below that window of opportunity, below those one-to-ones, below those large triggers, because this is the area where it shouldn't go. If this trade is going to be a winner, it should go from that area inside of favorable large triggers. And if it doesn't, it's okay. Anything that wins 70 to 80% of the time, guys, there's going to be a 20 to 30% cost of doing business. You're going to build trust in the look, so you're okay with that cost of business. So it doesn't make you anxious, so it doesn't make you nervous. But this is a trade that I'm taking every time it sets up. Every time I use my checklist and the rules are met, I'm entering this market, I'm establishing my risk because 70 to 80% of the time, this is my result. My initial stop that was below the window of opportunity reduces risk below that reversal bar that's in the direction of my trend, guys. Your initial risk will probably be 9 to 13 ticks typically. Once that market begins to move in the direction of the trade, you're going to find that you can sometimes reduce your risk down to 2 or 3 ticks. Your profit areas are clearly defined through Fibonacci using that momentum, guys. And this is your highest probability trend trade. This is your best of the best entry. Your job over the first 20 days is to study nothing more than this entry, guys, to get into the market at the best of the best spot. The easiest way to do that is to find odds favorable momentum on your 13-2 chart. And when you see those potential pullbacks, to circle those tails, right? And then look on your 5-1. There's actually quite a few instances right here to get you guys into the market. Do these tails line up with an area of resistance inside of favorable large triggers? We have 3 particular tails, odds favorable, smalls are through the area, guys. Here's your first pullback right to the mid-band inside of favorable large triggers. Here's your second pullback just a little bit above the mid-band. You'll notice that if your stop is outside of the large triggers, you're still in this trade. But then you get those 3 divergences. Maybe you don't take that final trade. And you'll notice that with those losses of momentum, it extends beyond that best of the best area, guys. There was opportunity for quick profits on the way down. Maybe you held off on the last trade. Maybe you used a little bit of chart reading and found a second chance entry with the momentum. Maybe you caught that mid-band and took it down to Fibonacci support. Guys, all you're doing for the first 20 days is developing trust, waiting for the best of the best look, having those advantages, making sure that the rules are met, and then taking pictures. With the market going up, guys, if you take a picture, you're going to annotate it, right? There's 2 things to do with these pictures. The first one is to annotate it. If you have Snagit, you can drop your trend trade checklist right onto the chart. Is the market coming from a good top or bottom? Did I have odds favorable? Is there no terminations? Did I have an area? Guys, if I'm marking yes to each and every one of these, I have a trade that typically wins 70 to 80% of the time. I know that I have a high probability trend trade. I've got yeses across the board. This is my focus, right? This is my entry. Right there at the area inside of favorable large triggers. Guys, your job is to take this picture, to annotate this chart. If you don't have Snagit, you're going to have to write the rules on there. Odds favorable momentum, yes. No termination conditions, yes. Did I have an area inside favorable large triggers? You can abbreviate, yes. Guys, I am obligated to take this trade, because this trade is in my plan as a brand new user. This is a trade that has the potential to win 70 to 80% of the time. This is the trade that's going to help me find success. Brand new with Nexgen, guys, and the confidence comes through the memory of success. Your job, once you take this picture, once you annotate this chart, whether you use the checklist or whether you annotate it yourself, is to hit that share button. Put it in screencast. Guys, if you're on TechSmith Capture, you're going to hit that upload button. You're going to get it to screencast. And then once you do, you're going to take that link, just like these guys did. Whoops, I'm trying to bring the education chat box over without making it huge. I'll just make it huge. And you're going to paste that into the room. Once you paste that in the room, I'm going to come back and I'm going to take a look at your charts, and we're going to talk about advantages, right? We're going to talk about rules being met. We're going to talk about rules not being met. You're probably going to get a virtual high five if this was your trade. And then the next thing, when you get confirmation that you are following the rules, it's your job to go to the spreadsheet, right? And to put that link into the spreadsheet so that you can come back and study it each and every day. And when I steal your trade, I'm going to give you credit. Philly's perfect, high probability trend trade long. It's going to be in my spreadsheet. I can go back and study it. I can make sure that this is something that I can repeat day in and day out, because this is the trade that gives me the best chance of success. Guys, is everybody good with this? High probability trend trade. Looking for advantages, taking those pictures, getting them in class, dropping them in the spreadsheet. Guys, if this is your focus for the first 20 days, you are literally creating a plan that's proven to win more than it loses. You are giving yourself the best chance of success. You are learning to read your charts, to understand where the market is likely to go and using it for targets, where it's likely to stop to make sure that you have a clear path. And you're also using it to understand where the market is likely to continue and giving yourself the best chance through the entry inside of favorable large triggers. You're going to want to go back and study this look because it's a look that repeats itself on every chart, guys. It's a look that repeats itself on every market. When you have odds favorable, when you have no termination conditions, the market is likely to continue at an area inside of favorable large triggers. You're going to be able to define a window of opportunity, which is going to allow you to define your risk, which is going to allow you to get the best entry, which is going to allow you to have the highest chance of success. Guys, this is your plan for the first 20 days. Are there any questions about the plan? Are there any questions about the rules? Are there any questions about the looks? Any questions about taking pictures, annotating charts, getting a link into your spreadsheet? I love that everybody in this room is an absolute pro with absolutely no questions. You guys are going to cost me a job. I'm going to have a new hobby. So the second half of class, guys, or the second 2/3, is we're going to take the pictures that you guys post in class and you're going to get feedback on everything you do. Every time you take a picture and post it in the room, we're going to talk about it, right? What did you do? Did you do it well? Were the advantages present? Did you follow your rules? This is where the gift giving begins, guys. Here's your high probability trend trade checklist. This is the rules for a high probability trend trade in a printable checklist that you can put on top of your desk and grab your biggest, fattest Sharpie and make sure that you're checking yes to each and everything that you do, right? Is the market coming from a good top or bottom? I've even included a link to the tops and bottoms videos to help you have a great understanding of those tops and bottoms, giving you the advantage. Odds favorable, momentum, no terminations, area inside. Guys, just over and over, print out 7 or 8 of these. Leave them in your desktop. See how many times you're able to click yes on every one. True story, guys, I've never had anybody follow this very simple, basic plan. This plan that revolves around advantages and your best of the best entry. I've never had anybody mark yes on this checklist for all 4 boxes and do worse than 70% winners. So if 60, 70, 80% winners, maybe it's time to take a deep breath and refocus, right? But Mark, I'm not sure what those are. I'm not sure what these rules mean. I'm all about taking away objections, guys. Here's your high probability trend trade checklist with pictures stolen from the resource materials so that you can identify exactly what you're looking for and make sure that the pictures you take of the trades you take match up with the looks that we've given you. And then just because I love to give you guys all the stuff that I can do, here's a simple trend trade, just a little path, right? Here's your checklist, a little bit about stop logic. If you're using range charts, cool, use range charts, but you don't need them for a high probability trend trade. A little something about profit targets, trade management, strong trending markets, everything that we talk about in the classroom, guys, you can define and put in front of you. This is a good one. This one focuses on that high probability trend trade. And then I've written one that's even, I think, a little easier. It's the exact same thing. What am I looking for? How am I going to manage it? When I go to medium probability trend trades, what am I looking for? How am I going to manage it? When am I going to add contracts? When am I going to remove contracts? When am I going to grow my account? Guys, all of this is put in place for you. Every tool that you need is available. Anything and everything that you need to be successful, guys, I'm going to give you. The only thing that you have to do is learn it, trust it. Look at that, odds favorable, no termination, right back to an area inside of favorable large triggers, and I'll be good gosh golly, that market is moving down. Guys, your job is to make sure that you never miss this, to keep your stops appropriate. All you're doing is looking for entries from that window of opportunity. And with that, that's our first hour. I'm going to leave you with the S&P. You can watch it. You can see that termination condition up top. But you can also see that termination condition below, guys. Look how the market bounces. Rule number 2 keeps you from getting chewed up in consolidation. Rules 1, 2, and 3 combined get you into this trade and out at the area where the market is likely to go. Congratulations if you took this trade. I hope that you show me a picture. Guys, I'll be back in 5 minutes. When I come back, we're going to start looking at the pictures that you guys posted. Lecture time is over. It turns into conversation time. I want you asking me, hey, Mark, let's talk about this. Let's talk about that. I'm not sure about this. Be active in your own education, guys. Participate in your own education. I'll be back in 5 minutes. We'll get that second hour going. So we've already learned the looks for when it's okay to trade, right? We've started that process of going through where we've recognized advantages, guys. You can identify momentum. You're comfortable with a clear path. Entry areas, we're working on those. We're getting great at them, right? So in regards to the path, we've already done the first part, and you guys are simulating right now. So now comes really the magic of what we do. I'm going to scroll through, and I want you guys to see. When I scroll through, I have to go from bottom to top, looking at everything. So I'm going to scroll back and forth. If I inadvertently, accidentally miss a trade, miss a question, just let me know. I'll go back and get it. But I'm going to start at the top, work my way down. We're going to go in the order, and we're going to talk about everything that you guys posted. We're going to talk about advantages. We are going to talk about disadvantages. We're going to talk about checklists. I like this one a lot, guys. Look at that checklist. Reminders. No contra trades. Don't pick tops and bottoms. So did this one have a good top or bottom? This one had a termination condition. It creates a full reversal. That's a great look. Did it have termination conditions on the 13 too? Well, the small triggers have broken through, but the larger not. This is really more of a medium probability trade. And then because it's more of a medium probability trade, Gary, this is a great read. This is an area with the potential to break. We talked about those medium probabilities, those areas that may break but haven't. Guys, this is one of those at 72.76. And Gary has annotated on his chart that I have anything can happen triggers, that this market's losing momentum, that there's multiple divergences, and he makes the choice to not take this trade. He's not willing to give up those advantages and hope that a trade wins. Gary, this is an amazing read. Very nice. And then Mike M., we saw yours, but it was so nice it bears repeating. There's that look again, that small trigger coming down. Large trigger hasn't quite cleared. He has one divergence, and he pulls right back to an area inside of favorable large triggers with that odds favorable momentum, and it goes down to that first target. And then Mike, at this point on the pullback here, you could have made that decision if you wanted to trade into a termination condition or not. I think that was a great spot to take profits. Beautiful trade. Geo, all the way down, right? Momentum in a tail, momentum in a tail, momentum in a tail. What did it look like on the 5-1? There's a mid-band, there's a mid-band, there's a mid-band. In the most basic form, guys, it's pretty easy, isn't it? Circle, identify, circle, identify. Gary, recognizing a market that isn't creating advantages, right? From resistance to support to resistance to support, channel surfing. Guys, you have the advantage with Fibonacci. You have the advantage with these rules to not get chewed up in these areas of consolidation. When the market's trying to figure out what it wants to do, you don't have to figure out what it wants to do. All you have to do is be patient. Wait for those rules to be met, right? Wait for that momentum, for that clear path. Seems like a good time for the shark analogy. Two types of people in the market, guys. There's the sharks and the remoras. Your sharks are the big money investors, guys. These are the institutional traders. These are the people that make the market move. These are the people that are reacting to Fibonacci. These are the people that know where those fibs are, just like you do. They respect them or they smash through them. Let them do the work. Let them create the momentum. Let them offer you the clear path. Be a remora. Sit on your hands and wait for the advantages. Let these guys get it going so that you can take advantage of all their hard work. You don't have to be first, guys. You don't have to be the first one in. You don't have to be the last one out. If you're looking to make $250 for contract a day, guys, taking a little chunk right out of the middle is going to be anything and everything you need to get where you are. And then Alex I like it. You used a picture to ask a question. Is this odds favorable momentum? Small triggers and large triggers are green. Small triggers above the large triggers. Is the large trigger look enough for odds favorable momentum? Alex, great question. Are you with me in here? I know it's been a few minutes since you posted it. Gary, great picture. Is that look enough for odds favorable momentum? Guys, let's go to the manual. Let's go straight to that odds favorable momentum, to that T3 trigger line reading. So Alex, when I'm talking about odds favorable momentum, this is my look. And one of the things that it says straight from the manual is both triggers are up and wide. Wide is a key term, right? What does it mean? It means that these lines on the large triggers are separated. And if we look at this picture, do you see how there is zero separation? I mean, zero separation there. They're flat, they're lifeless. There's nothing behind that momentum at all. Guys, flat triggers don't offer momentum. Flat triggers, notice how they flatten out before they turn, right? They flatten out as they're turning. If you just commit to that wide trigger look, Alex, that's going to be a better advantage. That look right there, this happens when the market's indecisive. Those large, slower indicators will flatten out, but your faster one will kind of spread, going back and forth over it. Let's see if we can find an instance. And this is a pretty good one right here. Maybe not. Little indecision. See those flat trigger lines? Whoops, can't see. Guys, did everybody lose me? All right, is that better? I'm back now. Cool. Chadwick says I'm back. Gary, okay, cool. So Alex, do you see that? That's that indecision, right? Look at how flat and lifeless, and look how the S&P dissects and bounces and goes through. The picture that you showed was nothing more than trigger lines. So if I take those fibs off and just go trigger lines, when it's dancing around a fib, when they're trying to figure out whether to go up or down, that's that look. Let them be wide. It creates a huge advantage. Did that help a little bit? That was a great question. Yeah, and guys, once you recognize that that advantage isn't present and you stop trying to predict, what you're going to find is that you're probably going to start winning more trades. I hope. That's always my goal for you, right? Great question, Alex. Thank you. Guys, that's how this classroom works. Doesn't matter what it is. Put that question in the room. Gary took that trade, right? Everything says down. There's a pullback directly to a mid-band. Money on the first. Out with that divergence down here and the weakening of the triggers. Gary, beautiful trade. Great patience, too. I know you sat on your hands for a long time waiting for that one to set up. And then Ron takes a little different approach. I feel like I say that every day. Guys, chart reading is what does it, right? Chart reading is what gets you where you need to be. Chart reading says that the path is clear. Chart reading says that we're in a strong tending market. Chart reading says that we're in a momentum phase, and Ron's going to hop in, hop out, make a little money. Trade lasted 3 seconds. That's not a bad 3 seconds of your life, is it? Guys, your chart reading is going to open doors probably. It's going to create the ability to pick the patterns that suit your needs the best. But it starts with that foundation. You need to be able to do those basic things to recognize momentum, to recognize a clear path, to understand where the market's likely to continue. And then Gary, you said that it came through, but it reached that fib, and you're just going to wait for that clear path because you're all about advantages. 50-50, right? Smalls above, large below, not coming from a good bottom. Divergence prints on the 50-50, and the HVA appeared. And you chose not to take this trade. Guys, that's that 50-50 trade. We haven't really talked about it. We haven't touched on that today. Let's talk about what a 50-50 is real quick. Because remember, we said that medium probability trades are probably going to be the vast majority of your trades, guys. So we know that when no triggers go through, the area is not broken. No trade, rule number 2, not met. And when both the small and the large break through the area, guys, now we have a broken area. Now we have a clear path. This 50-50 trade that you hear me talking about, guys, a 50-50 trade means that your small triggers have broken through an area, and they've broken through with odds favorable momentum. And this is such a key part. 6980 has the potential to break, but it's not broken yet until both the small and the large break through the area. This is an area with the potential to break, but it's not a clear path. Rule number 1 hasn't been met. 50-50 has nothing to do with your chance of success. 50-50 has everything to do with the look of 50% of your trigger lines above, 50% of your trigger lines below. So guys, if you're looking for that medium probability trade, give me a yes in the room, give me a Y. This area is not broken, and in order to have the best chance of success of it breaking, you have to have odds favorable momentum. Even here we had odds favorable momentum, right? And that 69.43 area ultimately doesn't break. So guys, it has the potential, but there are no guarantees. The path isn't clear. When I have a 50-50 look, I'm going to share these pictures. See if I can find it real quick. Oops, I'm looking at the wrong one. When I have a 50-50 look, when the smalls are through, the large are not, guys, when the area has the potential to break, when only 2/3 of my recipe have been met, right? I have to have that odds favorable momentum, and I have to have an entry area because I've already given up the clear path. My money's worth a perfect entry on the 5-1. As a brand new user, I don't want to complicate things, which means that I should have no divergence on my 5-1, no losses of momentum. It means that I should have strong triggers, that odds favorable momentum. And it means that when I identify my window of opportunity, I want it to be its absolute smallest because I want to reduce risk as much as I can on a 50-50 trade, on a trade where that area hasn't yet broken, guys. This is a medium probability trade. You have to be able to manage it assertively. You have to be able to identify trouble spots, get to break even as quick as possible. Same thing over here, 50-50 trade, right? Everything says up with strength. The areas have the potential to break. With no divergence and strong triggers and a tiny window of opportunity, you can minimize your risk on this trade, hoping that momentum pushes through the area, guys. This is your first medium probability trade. Your conditions may change on it as you grow with the software, as you recognize advantages, as you begin to understand when it becomes more advantageous. When the market comes from a strong top or bottom, 50-50s are more likely to work. When that market comes from a termination condition that creates a full reversal. So this is one of those 50-50 looks. It's not coming from a strong bottom because it's not a termination condition that creates a full reversal. It does have odds favorable momentum. It has areas with the potential to break. But Gary recognizes that he's losing momentum over here. Since this isn't perfect, he's making the choice not to trade. Gary, I think it's an awesome read. And no matter what happens next, guys, you got to stick to your plan. Safia says this is just some chart reading, right? Waiting for the area to clear, termination condition, rule number 2 not met. Absolutely perfect, Safia. Sometimes writing on your chart instead of taking the trade's a better opportunity, isn't it? Termination condition creates the reversal. Second divergence printed. And that one that you sat out of, it worked a little bit, didn't it? You got to be okay with that. You've got to be okay with the market doing what you thought it might do. And if your rules aren't met, skipping the trade. And I love that. And why are you okay with it? And that's rhetorical. I'm going to answer it. Why am I okay with not trading in determination conditions? Because I see them work so often. I see the market stop and reverse from these key areas that I've developed trust. I don't have to hope. I don't have to guess, right? All I have to do is follow rule number 2 and create that advantage of a clear path, giving me the best of the best look. Great picture. And for every trade you take that follows the rules, every trade you don't take that doesn't follow the rules, guys, you're just getting one step closer to that consistency. All right. Termination condition, waiting for the area to clear, right? 50-50 divergence printed, not your rule trade. Outstanding. Guys, taking pictures when the rules aren't met is an advantage. And then other things that you could put on this chart, Safia, is this 50-50 trade is coming from a strong bottom, isn't it? That's a good advantage. Divergence might keep you out. Great pictures, great annotations. Same thing, 50-50 with divergence. What was that, the S&P? There's your S&P. First one had divergence and it works, right? Now there's 2 divergences. And this one might work. And guys, this is where trust comes into play. Trusting your rules, right? So let's also talk about something, because guys, when you chart read and you get good at it and you recognize where the market's coming from, and I'm not advocating breaking your rules, but I know people that'll do this. Guys, when you reach a termination condition with this much momentum, sometimes it retests. If there's no divergence and strong triggers, sometimes people will take a trade, right? Maybe take pictures of patterns. When it's coming from a strong bottom with one divergence, sometimes people will take it and manage it assertively. And then 2 divergences, well, that changes it, right? Now we're seeing those losses of momentum. Now you're seeing trigger lines inside of the large. Guys, everything is about advantages. And if you keep it focused on advantages, what advantages have I given away? I've given away the advantage of a clear path. I've given away the advantage of momentum, beginning to on my small chart. And then just saying to yourself, I'm okay not taking this trade because it doesn't fit my rules. Guys, here your large triggers are down, your small triggers are up. Your background is green. Your synthetics are down, your large is up, your midband's green. That's a termination condition. Is there any reason to be looking for a trade in the moment? If you're following the checklist for a high probability trend trade, guys, I have to mark no on an awful lot of these, which means I'm probably going to sit on my hand and wait for the market to do what the market does. But what I'm going to do is I'm going to say, well, resistance held, and I'm coming from a bad bottom. Large triggers are down. Things are beginning to roll. Maybe the market's going to head down, and if it does, this has to happen for me to look for a trade. Or maybe this resistance is going to break, and then this has to happen for me to look for a trade. I start playing the if-then game. If this happens, then I'll do this. And if that happens, then I'll do that, guys. And that's part of the chart reading too. This is a bad bottom that came all the way up to a 50-50. The 50-50 doesn't work. The market comes back down, retraces to resistance. And now it's trying to push down, isn't it? But it hasn't yet. So we're kind of in that moment. John Novak said 75% of 50-50 trades not coming from a top or a bottom fail. I would agree with that number. What did it look like up here? Let's take a picture. Because I know that you guys were looking at this, right? And some of you probably took it, didn't you? But you're not showing it. You guys remember what the recipe for a strong bottom or a strong top is? It's a termination condition that creates a full reversal. This is not a strong bottom because it's not a termination condition that creates a full reversal. And then you take into it, what do we see up here? We see a 50-50 trade, right? And that's right. This is an area that has the potential to break but hasn't broken. And then divergence prints, right? There's that visual loss of momentum. And look what happens. So guys, your chart reading identifies whether or not you're coming from a strong top or bottom. I like the process of asking myself every time, where am I coming from? If it's not a termination condition that creates a full reversal, guys, that 50-50 chart or that 50-50 trade is less likely to work. Price reaches the area, no triggers through, it is a termination condition. Embrace this recipe for good tops or bottoms because a good top or bottom is a termination condition that creates a full reversal, guys, and that is the anchor for your best chance of success. Let's go to the second slide on this one. There's those 50-50s, right? If the trigger lines break through, it's not a strong top or bottom. Trigger lines broke through here, not a strong bottom. 50-50 fails. Triggers broke through here, not a strong top. 50-50 fails. Guys, there is a recurring pattern and a set of advantages, right? And then finally, there's that one right here. When the smalls break support, the market still reverses. But that formula, that price reaches, no triggers through wasn't met. It's not a strong bottom. And this was the precursor to that 50-50 failing. So guys, I'm going to share these pictures as well. I want you to steal these pictures. These are concepts that are going to help you find success. These are patterns that are going to help you find success. They're going to make you confident. They're going to make you comfortable. They're going to give you the ability to read your charts and gauge the advantages. And then guys, when the market comes from a bad bottom and it fails, it's likely to find that next key Fibonacci area. There may not be a trade to be had up here, but it keeps you from looking for that long, right? John says trend trade long as the triggers roll up, starting to break through the fibs. He took half off and +1 remainder just in case they make a third divergence. So didn't take the first one. John took the two divergence 50-50. But he took it, remember guys, manage assertively. If you're going to take a medium probability trade, you're going to enter great entries, create manageable trades. He exited at the first trouble spot, that higher divergence. Whoops, I got kicked out of Discord. Let me get back in and show you. I apologize for that. So guys, the same 50-50 trade that you guys are saying you weren't going to touch, he took. Why? Because of the advantages of the odds favorable momentum, because of the advantage of coming from a good bottom. And he waited patiently for every trigger line on his chart to be in the same. And he said that I'm willing to take this trade, to take quick profits. And if divergence prints, if that potential becomes true, I'll exit the trade at zero loss level because I have to manage assertively. And there's that third divergence, guys, and there it goes pushing lower. As a brand new user, you may not be able to read your charts fast enough to get in and out of these trades, right? You may not be able to create a list of advantages and disadvantages fast enough And you may jump in and you may hope a little bit, but notice how the first shot has the most movement with the momentum. Second divergence prints, less momentum up. Third divergence prints, and look how it pushes lower. And guys, right now those 1-to-1s printed, we're right into 1-to-1s with absolutely no trigger lines, which means that this is an area that may reverse the market, guys. And these 1-to-1s just beyond fibs act as like a little collection, a little bit overrun stoppage. So in the moment, we're in a holding pattern on the S&P, right? In the moment, we're in a holding pattern on crude oil. It's a bad bottom, straight to resistance. The smalls are starting to turn down, but they're on the wrong side of the large. We're still in an uptrend, right? But everything is angled down. Every trigger line is down. Guys, we're starting to see the potential for things to change direction, but our rules still aren't met. So we're going to wait and just be a little calm and get those advantages in place so that we have the best chance of success. What would you guys like to talk about? We're only in the second hour, guys, and I know that there's a lot of holding patterns. Why don't we do this? Let's make their 13-2 large. And let's just talk about what we see, guys. One of the tools you can do on Market Replay is you can crank that thing up to 20, 30 times speed and start going through it in your head. Uptrend, market's likely to continue. 50-50 on a termination, market's likely to stop, right? Bad bottom. And you can start scrolling back. There's a fib right in there. Smalls never made it through. Divergence from a fib, full reversal, opportunities. Guys, weak triggers don't make it through support. And look how the market reverses. It's not a perfect termination condition, but do you notice how your trigger lines don't break through with momentum? No reason to take a short, and it ultimately turns and gives you potentials for a long. Divergence high to the tick. None of the triggers break through, even with odds favorable momentum. Not an opportunity. But guys, there looks like there was a 50-50 opportunity to get to that divergence high. Let's take a look. Let's circle it. 3:12 in the morning. That's one of those 50-50 trades. I'm going to scroll back because I'm studying this look. I'm trying to figure out what gives me the best chance of success. Got to scroll a little bit, huh? No worries. All right, so there's the look. 50-50 trade with divergence, you might not take it, but where's it coming from? A strong bottom. That helps the case, doesn't it? Here, that 1-to-1 quit printing. We have got a clear path, odds favorable. And guys, there's a pullback directly to that support, and it goes all the way up to the next key area. This is in the middle of the night, but the patterns hold true, right? And then you've got that termination that creates a full reversal. That full reversal gives odds favorable. Zero divergence on a pullback to an area of support inside of favorable large triggers, and the market continues up. Guys, if you're in a short trade, you know where that market's likely to go. There's that same look. Everything says down, bad bottom, pulls back to resistance, continues the move to Fibonacci support. Patterns repeat themselves. Almost to the tick on that Fibonacci resistance, the market reverses. There's that look, support, triggers don't break, market reverses. Guys, are you beginning to see patterns putting you in a position where you can learn to respect them? Alex, are you with me? Look at those trigger lines, never getting wide, that indecision. Look how the market's dancing right around key Fibonacci support resistance. No momentum ever comes. Guys, this is why I love odds favorable momentum. It creates a very distinct advantage. Everything is messy, 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 and then once you get that odds favorable, look how the market rails down to that next fib. Nexgen users, you have the ability to recognize the conditions. And there we go, that bad bottom to resistance. Trying to get support, isn't it? Price hasn't reached support. Therefore, it's not a termination. I do have odds favorable momentum. Wonder what that window of opportunity looks like. That's a pretty tight little window of opportunity, isn't it? Do you see how quickly that read happens? That read happens quickly through repetition, guys. Repetition breeds confidence. It makes the looks easy to recognize. It makes the looks easy to understand the advantage of momentum, right? The clear path is pretty clear, isn't it? David S. Losers happen, right? So here's the real question, David. Did you follow the rules? You say the rules are met, but what are your rules? Let's take a look. High probability trend trade. Rules met. Entry was not in an area of support. Did not see third divergence. Lost the trade. All right. This one might sting just a little bit, David, and I don't mean for it to. How can you say, and maybe I'm just into the English language too much, how can you say that the rules are met and then follow that with entry was not in an area of support? Right? If your rules say that the trade comes from an area inside of favorable large triggers, and you traded kind of from the middle of nowhere, how could the rules be met? But watch this, David. You want to see something pretty awesome? Is that if you follow the rules here, if you enter that market at the area of support inside of favorable large triggers, and let's blow this up. I know, right? Fear of missing out. It's real, isn't it? Where is my... Guys, I love to go to the glossary of common terms. For those of you that aren't familiar with this term, the FOMO, I believe is what the cool kids call it, the fear of missing out. Guys, the fear of missing out will cause investors to make riskier choices than they otherwise might. This includes getting in early with a much larger stop than is warranted. Never guarantees a win, guys, only a bigger loss if it loses. Or getting in late without the proper advantages. David, I really like your read. And why do I like your read? Let's write the rules rather than just saying that they're met. Did you have odds favorable momentum? Absolutely you did. And did you have a clear path? Absolutely you did. So let's break down the 5-1, right? Let's only look at the 5-1. You know the rules are met on the 13-2. So let's go look at our entry chart. And let me get rid of these real quick. Your window of opportunity, if we go through the process from the top of the triggers to the bottom of the triggers, right? We're looking for an area of support inside of this window. David, what's absolutely amazing here, and I'm just going to change colors on this one real quick, is that is your window of opportunity. Do you see it? The area of support inside of favorable large triggers. Isn't that amazing? The rules are true. 100%. If you waited for the rules to be true, you're in at about 72.4. We'll call it 72.5, right? Which means that compared to your 72.8, you have 3 ticks less risk, and you also have 3 ticks more profit potential. That's one of the things that these entries are going to get for you guys, and this is why I'm so adamant. Focus on your entries at first and just keep practicing them until they become easy. If you're going for a very conservative approach, David, if you're looking for $100 on your first target, from 72.5, the only place you have to get is 73.5. Which means that waiting for the proper entry, if you're doing that hyper conservative $100 first contract, you put $100 in the bank. You get a dopamine response. There's that kick. You feel good. You're confident. And you're thinking to yourself, the rules work. And at that point, you go break even on the trade. Even if you don't, David, your study on termination conditions lets you know that 3 divergences in the same price range may reverse the trend. You have to study your charts. And guys, this is why a mechanical approach in the beginning is so good. When I first started, I was so wound up in the trade, I never saw that happen. It might as well have been a pink elephant dancing on a ball. But as I slow down and I get in and I've got money in the bank and I'm being very mechanical and very methodical with what I'm doing because I know that I'm brand new and I'm just getting reps and confidence. David, this is a trade where you could have easily made $100 and gone break even rather than holding a stop all the way down here, relying on hope to keep you in the trade. Does that make sense? And that's okay. Even if you didn't, David, let's talk about stop placement, right? Straight out of the manual or the manual, if that's your thing. Your initial stop is down here, right? Where the market shouldn't go outside of that window of opportunity. When this reversal bar prints off of that midband inside of favorable large triggers, David, you're risking about 3 or 4 ticks. So instead of losing 18 ticks, $180 per contract. Or no, 18 ticks is 300. Oh my gosh, that's so much, right? Instead of risking that much, man, now you're out of there for like 3 or 4 tick loss if you don't take that first contract. Like, no worries. And guys, this is why we focus on entries. Focus on your entries. Trust the entries, guys. Take pictures of that perfect entry. David, your read was spot on. You had the advantage of momentum. You had the advantage of no termination conditions. And honestly, you had the potential to get in at the area inside of favorable large triggers. And that's the part that we're going to build a little bit of trust on. So now you know, now you can go back and you can annotate this chart, right? And you can say, and I would do this too. I would put, I did everything perfect except rule 3. And then don't just stop there. Say entry at the area inside of favorable large triggers gives a small winner and break even on second contract. So you've taken the trade, you've taken your annotation. Hopefully, you've corrected yourself, right? You've said to yourself, I can't say that the rules were met if the entry rules weren't met. And you're like, okay, maybe I'm breaking this rule because of my fear of missing out. I've identified it, and now I can begin to work on it, right? So you're going to take this trade. I know you've already put it in your spreadsheet, but re-annotate it and pull up that copy of your tracking. And let me get my link from it. And I'm going to do this. And we're going to go through the process that's going to get you guys to where you want to be. Today's the 8th of June, right? What kind of trade was it? It was a trend trade, and it was an outstanding read, right? I'm going to put my link in there. You can do a hyperlink. You can just put the link. We'll call it David's Long. How did you feel? You got nervous, right? Because you had the fear of missing out. Let's put that in there. Annotate it on the chart. You're going to recognize it, and then when you go back and study those advantages, you're going to be like, man, maybe I didn't need to be nervous. I had those advantages. What was it? It was a strong trend trade. It looked good. How was your top or bottom, David? Were you coming from a good top or bottom? I don't recall. Yeah, you were. Termination condition creates a full reversal. Absolutely beautiful. Let's go back to the checklist and let's say it was a strong top or bottom. 13 triggers had odds favorable momentum. 5-1 triggers had 2 divergences. We just want to identify it, right? Target 1, if it's that $100, we're just going to put loss because you didn't win. You didn't win, right? What happened overall? It was a losing trade. And then watch this. This is where the magic comes in. In your notes section, Rule 3, broken. Could have been small winner, break even. So David, tomorrow morning when you wake up and you study what you did today, you're going to go, man, I'm going to look at this trade. And I had the rules met and everything looked good and it was a strong bottom and gosh, it was picture perfect. And my fear of missing out got me in early and my fear of losing stopped. And there was a couple things that I could do better. And David, you wake up tomorrow with this clarity. I'm going to focus on rule number 3 today. I'm going to focus on the absolute best of the best. And you might say to yourself, let me make sure I'm cool with that. Let me make sure that I know exactly what it should look like. So I'm just going to start clicking on a couple random links. Odds favorable, no terminations, entry at the area inside of favorable large triggers. Do you notice that this person said, is this a buy? I don't know whose chart this is. But they asked me, is this a buy? And we talked about this yesterday, guys. Your job is to get from the point to where you don't ask, is it a buy? To where you say, are my rules met? Did I have odds favorable momentum? Yes. No termination condition, guys. Be honest with yourself. It's a 50-50. It's a 50-50 with no divergence, strong triggers, small area. What do you guys think, guys? Give me a Y or an N in the room. Is that a buy? Is that a rules-based trade? Guys, this trade is chock full of kickassery. This is a great look, isn't it? Isn't it cool how you can go from is this a trade to my rules are met, I'll take this trade? You have to have a plan to do that though, guys. You have to write it out. You have to know exactly what you're looking for in the beginning. In the beginning, guys, let this be your plan. Let it be simple. Let it be rules-based. Let it be methodical. Write it out. This is what I'm looking for. There's your high probability trend trade, right? Strong bottom or top, not mandatory if the rules are met. Odds favorable, no terms, area for entry. Guys, this is the most methodical management plan that I know of. I've been sharing this with class forever. In the beginning, when you start out, guys, a mechanical entry and a mechanical approach to exits is going to prove to be advantageous. And I'm going to show you this right here. Define your management plan after you get good at entries. And make sure the Discord doesn't kick you out right in the middle of your speech. On my way back, guys, I promise. Here I come. Has anyone noticed that I say the same thing every day? That we have the same conversation every day? That confidence is going to come from the memory of success, guys. That repetition is going to breed that confidence. It's going to get you where you need to be. Guys, you are the most mechanical entry people taking ever. Use that checklist every time. My rules are met, therefore I take a trade. Guys, you're going to have to eventually manage these trades. You're going to have to be able to get in and out of them. You're going to have to know when to take profits. You're going to have to know when to get out. Right? Write it down. What's your management plan? In the beginning, mechanical is the easiest, guys. Mechanical approach to a checklist-based entry. Mechanical approach to a management, guys. If you trade 2 contracts Your initial stop will be set at 12 ticks. That gives you reaction time to put it outside of the window of opportunity. At this point in the trade, guys, when you take the perfect entry, there's nothing to do. You're either going to be stopped out or the trade's going to go in the direction that you anticipated it going. The next thing, your next mechanical move, is that your stop will be moved 2 ticks above a reversal bar in the direction of your trade. Good morning, 10KM. You can predict 90% of the time what I'm going to say. Good. Why do I say the same thing over and over and over? Because it works, guys. I say it so many times because I'm hoping eventually you believe me and you make it easy. Guys, move 2 ticks above the reversal bar. Your 14 ticks of risk just turned into 7 or 8, right? Methodical, opinionless, emotionless. The only thing that's going to happen now is you're either going to get stopped out for a small loser or your first target's going to get hit. Guys, your targets have already been defined and they're waiting for the market to get to them. The first profit target's $100, at which point your stop moves to break even. First target hit, absolutely no risk. Guys, dopamine kick. I'm a winner. The money's in the bank. They can't take that from me. Show me the picture, Alan. I can't wait to see it. The only thing that can happen now is my second contract gets stopped out break even, or I go to my second target. And my second target's $200, guys. Mechanical, methodical, no room for emotion. And if it hits, guys, that's a $300 trade. Right? $300 trade divided by the 2 contracts, that's $152 or $150 a contract. If you catch this trade twice, guys, you've hit your goal of $250 per contract for the day on a 2 lot. Highest probability. Do you guys know how much 250 contract a day is a week? Guys, that's $2,500 a week. That's not a bad week. But it gets better. That's a $10,000 month on that same simple, mechanical, methodical. What happens when you use that Apex multiplier and you do that on 10 accounts, guys? Right? It turns into a $100,000 month. I missed a 0 in there. What happens when you do it on 20? It's not more trades, guys. It's better trades. It's using sound reasoning to get in, focusing on your execution, focusing on the entries, and then ultimately learning how to manage the trades. 10K, I say the same darn thing every day because it works. Tony says, when there's a strong bottom, a termination that creates a full reversal, and it gives me odds favorable momentum with a clear path, he'll take a pullback to the area inside of favorable large triggers. Guys, is it just me, or does he look like a sniper? He took profits at the first one. He has absolutely nothing to lose as that market goes towards his second contract. Both targets hit. So you made, that's 10 in from 92, 18 on the first and 28 on the second, and that's crude oil. So what's 18 plus 28? That's 46, isn't it? Am I doing that math right? And then since it's crude, you put a 0 on the end. That's a $460 trade, guys. That's $40 short of a daily goal from one trade, being patient, waiting for the advantages, not trading in determination conditions. Isn't that it right there? Guys, what's the hardest thing? What's the absolute hardest thing about being a day trader? Is it recognizing odds favorable momentum? I don't think so. Is it recognizing termination conditions? Absolutely not, guys. You're going to have that in the first week. Even the entries aren't difficult. Doing nothing when there's nothing to do, guys. That's the hardest part about being a day trader. But let's compound. If you have absolute trust in your methodology. If you believe wholeheartedly that it wins more than it loses because you scrolled back on 10 days worth of data and tested it, because you simulated it and tested it, because you presented in class and got feedback as you tested it, guys, don't you think there's going to be a point where you trust this so wholeheartedly that you never miss it? That you take that trade, and Alan, if you took, oh, Alan, stop making me proud. Same trade, right? Odds favorable, everything says up, absolutely beautiful. And Alan is in at the top of the window. Rock on. First target was 10, move stop to break even, second target 20. Alan, was that about the easiest $300 you've ever made? Were you nervous? Or were you confident? So I'm going to steal Alan's link. And I'm going to put it in my spreadsheet. Guys, I hope you're doing the same thing. I hope you're building up this Alan's perfect long is what we'll call it, right? Every advantage in place, guys. Everything is perfect, and it's easy, and it's effortless. And do you think it's a coincidence that everybody took the same trade and everybody made money? I don't think it is. So I'm going to take that link, right? I'm going to copy it. And I have to put it in my tracking folder. Alan, is it in your trade? Is it in your tracking sheet? Tony? Gary? Did you put that link in there? What is today? Today's the 8th. Oh my gosh, already? That's, well, I moved this to October. So 6-8, right? What kind of trade was it? It was a 50-50. How'd you feel? Man, I was relaxed, cool as a cucumber. I had so many advantages. I almost felt guilty taking their money. It's a 50-50. I had the best trigger look I could have ever had. I had a strong bottom, right? Guys, you're coming through and you're identifying the things that brought you success. What did my 5-1 look like? It was rock star awesome. Target 1, they paid me. Target 2, they paid me. I don't know why we have the what happened in there with the same options. And since I'm going to study this tomorrow morning, never miss this setup. This is how I get paid. So Tony, Alan, Gary, tomorrow morning when you come through and you click on that link, and it brings up that picture with all of these amazing advantages, that checklist-based, holy smokes, I can't do any better than this if I tried. Isn't this what you're going to be looking for tomorrow? Isn't this the success that breeds confidence? Guys, this is the plan. But you have to trust, right? You have to believe that it's going to get there because of the momentum. You have to believe that that area inside of favorable large triggers is going to provide a bounce. Guys, that is outstanding trading. If you missed this trade, if you didn't take this trade, if you said, I'm not taking it because, well then guys, I want you to tell me what that because is. And here you have odds favorable momentum and you still have a clear path. And guys, if you took the entry at the midband inside of favorable large triggers, third divergence might have taken you out. If you were in at 07, you might have made $100, gone break even, gotten knocked out of the trade, don't care what happens next, right? If you got in at 08, it might have missed your first target. And you might have just, well, then your stop, you probably still got out pretty close to break even. The only thing you have to do, guys, is develop trust in the rules. If you didn't take that trade, please tell me why you didn't take it. Let's talk about it. If you were unsure on that trade, David S., did you take that trade? Chadwick, did you catch it? Who else is in here that's still relatively new? You caught it? Beautiful. How come I'm not seeing pictures, guys? Are you so good at this that you don't need help anymore? That's awesome. That means I did a good job, right? Why not show me a picture? Why not write your rules on there? Why not reinforce it? Yeah. Telling you guys, this is like, it only works if you work it. Alan, you were in at 08. You were out at 10 when divergence was true. Made 2 ticks at the last shot. Beautiful. 320 bucks is a great way to get things going, isn't it? Guys, to most of you, 300 doesn't mean anything. If you walk down the street and $300 fell out of your wallet, you probably wouldn't be pissed off, right? It's not the $300 that's important, guys. It's being able to make that $300 3 or 4 times a day, right? It's being able to take that $300, and do it on a 10 lot 3 or 4 times a day. It's being able to take that same $300 and expand that out over a lifetime. Guys, $300 a day per contract means that you never have to work again if you're consistent. It means that you never go back to the job. You don't have a boss. You can travel the world and make money from anywhere in the world. That's what $300 a day means, guys. If you're not making it, maybe simplicity is the right approach, don't you think? Wasn't that simple? Wasn't that easy? Wasn't that rules-based? Wasn't that picture perfect? All you have to do is study until it becomes easy. That's it. All you have to do is learn the rules for when it's okay to trade, present those pictures in class to make sure you understand the rules, and then simplify it until it feels easy. How long does it take to do that, guys? Some of you will get it on day 1. I've seen people successful with the software inside of the first week. Some of you it'll take a couple months. How do you show your entry and exit? Absolutely. So do you have to populate? So watch this. If you right-click on the screen and go to data series and click Chadwick, scroll down, and where it says plot executions, it'll be the last spot in there. If you click on it, it gives you 3 options. You can do text and the marker, or you can just put a marker on there. And then when you click apply, and then OK, and let's just say we get in real quick. I sell it, right? I hit close. You can see those markers on there. Over here, I have text and marker. So just use that data. Right click, data series, or data, if that's your thing. And then go down to plot executions, and then you'll be able to see everywhere that you get in and out. For me personally, I like to see the numbers because I'm not a math guy, and it makes it easier for me to know exactly where I got in and where I got out. Alan, high probability, nothing in the way. 2 divergences printed, picture perfect entry. When it missed your first target, you tightened up because of the divergence potential. Beautiful management. And then David, trend trade, rules met, 1 divergence, not too greedy. So you take the entry and it's perfect, David. Oh no, yeah, that was, David, this is you, right? Instead of rules met, why not write the rules? Why not reinforce them? I know you're a smart guy. Reinforce them. I had odds favorable momentum and I had no termination conditions. And I had an area for entry inside of favorable large triggers. Guys, I kid you not, if you write that on every chart, you're going to become so stinking good at your rules, you're never going to miss the trade. Chadwick. Chadwick, can you show me your entry chart? Do you know how to do that? I'll help you. Let me show you. And guys, this is why I love it when you post pictures. because it means that we get to have great lessons. So Chadwick, you're using TechSmith Capture, right? Guys, this is the most important thing in my opinion. So I'm glad that we can do this. So when I click this great big capture button, if I hover over just one chart, it's only going to take a picture of one chart. So what you have to do, Chadwick, is if you left click from the top left on your crude chart here, I don't even need to see everything behind it. And I'm going to click and drag all the way down to the right. I'm going to make sure that I get my timestamps, my price, and that way I can line up my entries. When I release, it's going to give me that camera. And when I click the camera, capture an image, now I'm going to be able to have both. So what I can do here is I can take that shape and put it around the tail. I can take that shape and put it around my entry. I can use that call out and I can say odds favorable momentum was true. No termination conditions were true. Strong bottom was true, right? I'm reinforcing all these things that make me successful. And I just looked over and I'm not in the room, so give me just 1 second. Guys, Discord is just messing with me today. And I'm sure that's all of you guys telling me. All right, can you hear me again? I'm getting that picture up. Okay, so there we just got the picture up. So Chadwick, did you catch the click and drag to be able to get both charts? And then that annotation process happens, guys. This is the part, no worries, so let's do it over. Capture software, I'm going to click that big red button. If I hover over one chart, I get one chart's worth of information. If I click and drag, left click and drag it all the way down to the bottom right and release, I can take that picture. And when I take that picture, now I've got that preview. But what it does for you, Chadwick, is look, there's that tail, right? There's that area for entry. That's that rules-based entry. So I'm going to use that call out button. And I'm going to say rule 1, and I'm going to remind myself what it is, right? I'm going to say odds favorable momentum, and that was a yes. And I'm going to say rule 2, no termination conditions, right? And that was a yes. And I did have a strong bottom. I'm taking the information that found success, and I'm putting it on that one. And then I'm going to my 5-1, and I'm saying I had a mid-band inside of favorable large triggers. And do you see how what that does for me, Chadwick, is it lets me identify exactly what I'm looking for? And I might even circle. There's the top of my triggers and the bottom of my triggers are a little bit lower, right? My window of opportunity is that big. So it might have gone all the way down here. And then what you're doing, Chadwick, is you're reinforcing the rules through writing them on the chart. You're reinforcing the rules by seeing them visually compared to the words that you write. And Chadwick, your entry was somewhere up here, right? So you had a perfect read. But what rule do we need to work on? Got to work on that rule number 3. And the picture that you present in the room lets me know. So Chadwick, if your entry was right here, you and I get to have an amazing conversation about how you could have reduced risk, how you could have increased your profit potential, right? How there was so much more to be made with so much less risk on this trade. And then you take all that great information and you copy it and you drop it in the room. And you're better prepared to take that perfect entry next time it presents itself. And you want to see something cool? Guys, does the classroom work? Let me ask David S. David S., just pointing out that your best entry comes from the area inside of favorable large triggers. Does it make class more manageable? Does it make it easier to get in? Does that reinforcement have you focused on the best? Because I feel like that's a huge success for you today, right? Your entry earlier was up here. And you made this trade one that was winnable, right? Easy $100 all the way through. Well, shoot, that's an easy $400. Fantastic, David. And you're going to break it again. Chadwick, does that help a little bit? No worries. Your buy order was lower in the box. So that's something. When I know that information, watch this. Man, Chadwick, I'm telling you, everything is a lesson. I can't stress that enough. So let's talk about the lesson that was there, right? Whoops, where'd your picture go? I thought I marked it up. So this is just your 13.2 chart. The momentum on the 13.2 chart should be outrageously strong, right? Rule number 1 says that that market is screaming to the upside. Rule number 2 says that there's nothing in the way. So you're literally watching a semi going down I-10 between California and Texas at 90 miles an hour with absolutely nothing in the way to stop it. Does that make sense? That's about the best analogy I can give. It is a freight train. So because we have a freight train of momentum, because there's nothing to stop it, the high end, the top of that window is the most likely spot for a bounce because of the momentum, because of nothing in the way. It may go to that lower area, right? It could go to that lower area. But when the rules are met like they were, it's more likely that the top of that window is going to be the spot for entry. And this is part of the trust process as well. Don't trip over a couple pennies, right? And let it cost you a lot of dollars. Get in at the beginning, and this is why our stops go outside of the window where the market shouldn't go. And what'll happen, is you'll stop missing those trades, and you won't have to jump in and increase risk, and you won't have to jump in and reduce profits. But it was a great read, Chadwick. Your momentum was solid, right? Everything said go. You knew exactly what you needed to do. We're just going to refine that rule number 3 and reduce your risk and increase that profit potential. Let's see what Paul did. Paul said, with a great bottom and everything up, look at that entry. Great googly moogly. And guys, that's a technical term. Look at that entry. What was that, Paul? 3 ticks of risk, 4 ticks of risk when it started going? And then you get that second divergence. You get in at the best of the best spot. It goes up. Man, it just doesn't get you. Divergence prints and you exit. Small loss, acceptable, right? You had the rules met, your stop in place, divergence prints. You didn't wait to hit the stop. You said, hey, look, that's 3 in the same location. I'm going to get out. Beautiful trading, Paul. Great job. Guys, small losses are a normal part of a positive equity curve. I can't stress that enough. Losses are a normal part of a positive equity curve. It's just a cost of doing business. The more you trust your entries, the more you trust the rules. All right, what do we see? Guys, how do we feel about a 50-50 trade from a bad top? Not a termination condition that created a full reversal. Gary gave us a figure earlier. He said 75% of these tend to lose. So if a 50-50 from a bad top already has the cards stacked against it, how do you suppose a 50-50 from a bad top with divergence is going to react? Do you feel like you're giving away advantages a little bit? It might work. But my rules say if divergence prints on a 50-50, especially from a bad top, I'm cool taking 5-minute break. I'm going to go grab a sugar-free popsicle, guys, because sugar-free popsicles make me happy. And I'm going to get my mind right for the last hour. Do me a favor as we come into this last hour, guys. I want you to post your questions, right? I want you to ask me, Hey, Mark, I need help with this. Can we talk about it? Mark, can you cover those good tops or bottoms? Can you cover those entry areas? This is your classroom, guys. Last hour's up to you. There's going to be an awful lot of microphone silence if you're not asking questions and posting pictures. I'll be back in just a few minutes. All right, let's finish strong today, guys. Paul, you were asking about the NinjaTrader 8 update yesterday, getting that reaction. I asked my brother and I said, have you updated? And he has. So I don't know that there's anything challenging. I know that he's already done it and I haven't heard him grumble. It should have given you an update, right? It gives you a link to the update. So let's take a look. Let's go to... And I'll ask John if he put it on the installers, if it's the new version on the installers. I'll ask him right now. But if not, if you go to the platform, there's got to be a NinjaTrader download, right? And he says that it's not there yet. He says the date on the screen is it. I think I just made him panic. Let's take a look and let's go to the resources. 5/29/23. So that was their latest. So I don't think it's the new one. Um, so we can have it do it. You haven't received the notification. When you open up NinjaTrader 8, they're giving you that notice. Hey, you have to update in order to do it. Sorry, guys. John and I are talking back and forth on Skype. He's like, oh, did I mess something up? Gary, what did you do here? Gary, 50-50 with divergence. Chose not to take it. You said too many ticks for confirmation, and there really never was, right? There was never a confirmation bar, not a market flow, no trade. Great job, Gary. Good job sticking with it. And then Mike M. Both triggers are through. So you had a clear path, right? And you had anything can happen. And you get in at the area and it gets you out, right? You said the market moved so fast, was not even done saying order filled before she said stop filled. That was a pretty quick one, huh? Oh, it's NASDAQ. Yeah. Mike, are you familiar with trading NASDAQ yet? Hey, Goku 1997, nice to see you. Or how long have you been trading NASDAQ? Because I trade it every now and then. I'm not afraid of NASDAQ. One of the, Gary, large chart, small chart. How's that for the answer? Large chart, small chart. Mike can answer if he wants to. So Mike, let me show you one thing that's helped me tremendously with the NASDAQ. I'm not saying it's a rule. I'm not saying it's what you should incorporate, but I really think that you should study it. Do you see this entry inside of the small triggers? And look at that close on the correct side of the small triggers. What you're going to find if you do a little bit of study and scroll back is that if your closes are always on the correct side of those small triggers, the likelihood of success and skipping all this nonsense goes up dramatically. I've even got it written on a piece of paper somewhere on my desk that says never, ever, ever fight the strong triggers. Guys, there's NASDAQ workspaces available on the resources page. You can go through. I don't know what size charts these are. My guess, if it's the one that John Novak put in, is you're looking at a 34.5 for your large chart and a 13.2 is your entry. And he created the indicators on the 13.2 to look exactly like the 5.1. The patterns are the same, right? The patterns are the same. Strong triggers, no terminations, areas inside. Safia, it depends on what that means. Sorry, I talk a lot. And then Earl, I'd love to describe the reversal bar markers. It's really pretty simple. Earl, are you with me? This reversal bar marker is the price at which this bar becomes a reversal bar. That's all it is. If this price goes all the way down to 71.75, it's going to print a red down bar. If this bar goes all the way up to 71.97, it's going to print an up bar. That's all a reversal bar marker is. It's just the price where it becomes a reversal bar. How do we use it? On your large chart, if price accelerates away from the large triggers, let me see if I can find an example. If price accelerates away from those large triggers and hits an area, Earl, and those large triggers remain above the reversal bar marker, there's a full bar's distance to get back, it's likely to close that gap. It's a gap theory. That's how you're going to use it. If an area is reached and these triggers were above, we would expect it to pull back, but it's just the point at which the market reverses. Explaining the entry on NASDAQ. All I was saying, Safia, you're welcome, Earl. All I was saying is that NASDAQ is a psychotic weasel on meth sometimes. And that's a good-looking entry, right? That's a rules-based entry. But when these large trigger or these small triggers come against you, what I've found in my study, and guys, I study patterns all the time, is that a close on the proper side of those small triggers, on the business side, on the winning side, on the upside of those small triggers, creates a huge advantage. That's all I'm saying. It's not a rule. It's not written in the Nexgen guidelines. It's nothing more than my own personal time on the NASDAQ. And when I see this and these triggers turn against me, I wait. Why? Because this is momentum phase down, right? And the NASDAQ has a tremendous amount of momentum. So that little bit of patience, get to the right side of the smalls. It means that it may go down. And if it doesn't get to the right side of the smalls, guys, you avoid a loser. And you can even have like a stop in right there. I didn't say that, Safia. You're making up rules. I said that when the rules are met, a close on the correct side of the small triggers creates an advantage. Why? Because the bars went from momentum down, they weakened, and then they got to the business side, right? No, I'm saying don't fight small triggers. That's something that you should study and take a look at. Because NASDAQ is excited. NASDAQ is fast. NASDAQ will overrun. And just like Mike said, he was out before she even finished telling him that he was in. So does that make sense, Safia? It's too fast for most people. It really is. But guys, if you look at it even on one of these charts, right? When everything's coming up, but the market's pushing down, right? It's coming through. Look at how this works on your 5-1. Wrong side, wrong side, wrong side. I don't know. It might go from the pivot stop out, but look at how far outside of the smalls I am. Gets to the top of the triggers. Guys, there's your close on the correct side because you've weakened that instant momentum. There was a time with Nexgen that this was your entry, guys. When you're not sure and you need a little confirmation, maybe it moves too fast, maybe it's overrunning a little bit. At least being on the right side of that fast momentum helps. When it's clear cut and high probability, maybe not. You get in at the area. But there's no reason to ever fight, right? Termination condition coupled with divergence. It's not working a whole lot, right? Rules not met. Did that help, Safia? I don't look at NASDAQ either very often. Sometimes I will. Sometimes it moves nice. Sometimes it doesn't. If I'm going to look at NASDAQ, guys, you want to know what I do? I open up my NASDAQ workspace, and I'll let that load. Whoops. That was the wrong workspace. But what I'll do is I'll scroll back, and I'll look at patterns, and I'll circle a tail, and I'll see how many times it worked well and how many times it overran the areas, and it'll give me an idea of how emotional that market is for the day. And that helps me out a lot. Paul, Bad top, 50-50, multiple divergences. You chose not to take it. Nice job. Isn't that awesome? It's a 50-50 from a bad top. Paul says, 2 divergences, just not my trade. And you got to be okay with that, right? You've got to be okay with not getting in the market, but you have to be committed to entering the market when the rules are met. And that NASDAQ is still loading up. Guys, what do you want to talk about? We're almost there, right? I'm waiting for my NASDAQ to finish loading up. And clearly it's been in a pretty big push all day long, it looks like. Rules met or rules not met, guys? That's the one. Has everybody written a plan? I'm trying to come up with as many things as I can to help you guys out. Keep it simple. Guys, if you haven't done this yet, those of you that I know are trading, going for Apex, guys, have you written out a plan? I'm not saying made a checklist. Have you written out a plan? In order to take a trade, these rules must be met, guys, and this is what I'm committed to, hell or high water. This is my plan. When I take this trade, this is my management. If I have a different trade that's not a high probability trend trade, whether it's a high volume area trade, maybe it is a momentum style trade, guys, I need to have a plan for that one as well. I need to write it out. This is what it's going to take to get me in, because I have to be consistent, right? Early meeting today. Have a good one, Paul. And then if it's a different style trade, doesn't it make sense that the management may be a little different? If it's a medium probability trade, doesn't it make sense that I have to manage it more assertively? Guys, this is your most simple approach as a brand new user. And there really is, guys, there's no reason to stray outside of this. If you're not finding success with simplicity, how on earth are you going to find success with something more difficult? Gary, termination condition into a termination. 3 divergences in the same location. I like seeing that. 3 divergences in the same location. Once again, 3 divergences. You're starting to roll. They just didn't give you an HVA line. So what Gary's looking for here is what we call an HVA trade, a high volume area trade. And a high volume area trade, guys, it's the exact same reads that you learn with the high probability trend trade. The high volume area trade, rule number 1 says that you have to have a good top or bottom, a strong top or bottom. It means that you have a termination condition that absolutely no trigger lines break through the area. Rule number 2 says that if you reached your target, then there is no trade. Look at this. Gary points out, I reached my target already. I do have a great termination, but I reached my target. There is no trade. And then you're going to enter it in a high volume area at the trigger lines. Guys, this is a great trade. This is a trade that allows you to take advantage of tops and bottoms of those great termination conditions. This is a trade that lets the momentum slow down on the smaller charts. You don't have to guess if an area is going to hold. You can let your small charts tell you that it's going to hold. Guys, if you're not interested in those silly little medium probability 50-50 trades, this is a great second trade to add to your plan. But once again, if you're not finding success with a high probability trend trade, there's no reason to go to the HVA trade yet. Go back and master that first trade, guys. Get profitable. Get your win percentage up. Get to the point to where you're taking a trade that teaches you everything you need to know about where the market's likely to continue, likely to go, likely to stop. Commit yourself. Learn how to follow your rules before you start creating more rules, before you start adding things. Gary has no challenges with the high probability trend trade. It makes sense that he would be looking for something else, another opportunity. And guys, this high volume area trade coincides with the exact same thing Nexgen's been teaching for 20 years, guys. This has been the plan for as long as we can remember. Define a termination condition at Fibonacci top to be true. If it's true, the triggers must roll. If the triggers roll and you've incorporated that 8-range chart, guys, you've moved beyond the 2-chart process, you can use a market flow entry to pull back to the triggers in a high volume area line. This is what we call the HVA trade. It's not a high probability trend trade. You can't use the same checklist for it. From that HVA trade, if everything is strong on all charts, if the path is clear and you have an entry inside of favorable large triggers, well, then you take that high probability trend trade, guys, and you continue this process all the way down until you reach support. And then the process starts over, guys. It either breaks and you keep looking for trend trades, or it holds and you look for those HVAs, look for those trend trades. Earl says, Mark, I have a sale job where I'm constantly getting calls. Is it possible to trade with that environment? For me, Earl, I can't speak for you because you may be gifted and talented. I struggle multitasking a little bit. I do. I struggle multitasking. But the flip side of that, Earl, what are your hours? I'm not sure what time zone you're in. Guys, I like looking for solutions. I don't like problems to become obstacles. So if I'm constantly getting interrupted, there's a couple different things I can do. Let's say, just hypothetically, you're in the central time zone, right? And you have to be at work at 9 a.m. Crude oil moves early. NASDAQ moves early. Even the S&P moves early. You have an opportunity to trade, right? You have an opportunity to trade before the market opens. If you can change your hours 12 to 9, absolutely. You have all morning. And if you're following that high probability trend trade, man, you've probably made your money long before noon, right? I personally, if it's my money on the line, I don't want to be distracted, guys, because I don't react well. You guys have seen me in the class, right? I'll be talking about this, and Earl will ask about hours, and I'll forget about everything that I'm talking about, and I'll start talking to Earl. I've done it a million times. I know my limitations, guys. You have to know yours. And sometimes it's better to have a little bit of clarity and some focus, especially if it's not second nature. Mike, you tried to work and trade. It didn't work for you. Guys, I tried to trade and teach this class once. True story, I got my ass kicked because I couldn't manage, because I couldn't divide my focus. I thought that I would be able to, but I couldn't, but I tried. And then Earl, you've always got market replay where you can go through and you can still get better every day, even when the market isn't trading. And I know that it's not making you money, but let's say that you're learning the software, right? And you're like, dang it, I just want to get great at it, but I can't do it during the market hours. Market replay. You can go back at the end of the day when you come home from work and you can replay the day like it was live, right? You can still get great at this, guys. You can set up for your mass exodus from that job. And then when you practice on market replay for a while, then you catch those hours where the market's moving. You just wait for those trades to set up. Some of you know this. I work in the afternoons after class a few days a week. Got another job that I absolutely love, and I have absolutely no desire to quit. So some days I have an hour and a half before I have to leave. And if the trade's set up, that's great. And if they don't, they don't. You know? Market replay. Finman, are you on 7 or 8? So here we go. How do we do market replay? Here's a video. And Finman, I could talk you through it, and the reality is it's probably not going to make any sense just watching me do it. So I'm going to show you how I learned to do it, and I'm going to let you give it a go, and then you can ask me anything you want. But I don't even have NinjaTrader 8 up, but this video is going to talk you through step by step what it takes to do it. So what I did is I would start the video, and when they got to the first step, I would click pause, and I would do that first step on NinjaTrader 8, and then I would hit play, and he'd get to the next step, and I'd click pause, and I would do that next step. And I can tell you that it took me about 3 times of doing this to be really comfortable. There's the one for 7. And let me see if I can just open, because I don't want to just give you the link to the video and say good luck, right? That doesn't feel cool. Let me get my NinjaTrader 8 open real quick. No, it really is easy. That video for NinjaTrader 8 was like 1 minute and 55 seconds, right? My NinjaTrader's coming up right now, so give me just a second and it'll pop up. Guys, there's that pop-up announcement saying that you're going to have to upgrade desktop users. This should come up every time you open it. I can tell you John's already updated. All right, so my NinjaTrader 8. Awesome, I'm glad to hear that. So from NinjaTrader 8, we're going to go tools. I have to disconnect from that one, from my live. Disconnect, there we go. And then I'm going to connect to my playback. And when I connect to my playback, it's going to ask me about the historical data. What do I want to do? Well, I want to do crude oil. And I want to replay yesterday. I want to replay the 6th on crude oil. So I'm going to download. And it's going to load the data for crude oil. And then I'm going to click continue. And when I click continue, this bad boy comes up, right? This is my playback button. That's how easy it is. I'm going to set the dates, and it doesn't have to be one day. But I'm going to go from June 6th to June 6th. And then I'm going to hit work spaces. And the only thing that I use NinjaTrader 8 for is are my entries. So what's going to happen is my crude oil chart's going to come up. If you have a full workspace, you'll have both of those. But that's it. I can adjust the speed. So watch this. I'll go up to 1,000 times. And I click play. And check it out. There's the S&P from yesterday moving at 1,000 times speed. So what you can do is click pause and go, hey, I think I have a long trade here. Let me double check my rules. I have odds favorable. I have no termination conditions. Oh my gosh, the rules are met. Yeah, I'm going to buy the market. And then I'm going to hit play. And I'm going to say, darn it, I traded into a termination condition and it took my money, you know? So it's just like being live, guys. And granted, that's 1,000 times. I don't think you should trade 1,000 times. Speed. Does that help, Finman? It really is that easy. And then when you're done with it, disconnect, right? Close your workspace, save those changes, and you're good to go. Guys, market replay, you can get 2 days worth of experience every day the market trades, right? You can hit pause and make sure that your rules are met. John Novak used to take market replay and he would do nothing but a large chart. And he'd set it at 20 or 30 times speed. And he would go, market should go up, market should reverse, market should go down. He wouldn't even take a trade. He was doing rules 1 and 2 and just getting really good at them. So I hope that helps. It'll literally take you 2 or 3 times to get comfortable with it, Finman. But if you have any problems, please bring them to me. Let me know if I can help. Market's going down. Market's going down. Did have strong momentum into a termination area. Didn't take the trade. Why bother, right? Why take a trade into a termination condition? Maybe if there was no divergence and that mid-band was inside of favorable large triggers, I might be able to justify a little rules break, but not with a loss of momentum into an area that hasn't broken and my area for entry isn't even inside of favorable large triggers. Pshaw, you can have it no matter what happens next. Rules met, rules not met, guys. Those are my options each and every time. We've got about 15 minutes left. Is there something you guys would like to talk about? Guys want to talk about entries. We hit those reversal bars, right? We talked about odds favorable momentum. Guys, prices reach resistance. None of the trigger lines have broken through. Multiple divergences, weak triggers. Is there any reason to sit and hope? I hope it breaks. Man, I'm going to bet my kids' college tuition, and I'm going to hope this area breaks. Or, even worse, look at all these red fibs. I'm going short. Why not just wait for the advantages? Wait for the rules to be met. Guys, wait for that absolute best of the best. Life doesn't have to be hard, doesn't have to be difficult. It really can be simple. It really can be focused. You have the opportunity to have every advantage getting into a trade. All you have to do is embrace it. Guys, look at that. They're killing crude oil. Killing crude oil. Right from a termination condition. Sometimes this is going to happen and you're just going to sit there and go, dang it. My rules haven't been met. This market's screaming to the downside. And you're thinking, I'm not getting paid, right? Who's thinking that right now? Son of a gun, I'm not getting paid. But you know what's great? Is you're not the crude oil investor that's watching their portfolio absolutely sink. You're not the crude trader that can only go long. So you're just watching it. You're saying, oh, I'm not making money on this one, but if I sit still and I wait for rules to be met, there's a good chance I'll make money on something later. Ron says, I love straight line moves. These guys are going to pay me. Not a high probability trend trade, is it? But it sure is a strong trending market with a clear path. Strong, hateful triggers. I love that phrase. I'm going to start using that. And room to the next area. And you'll notice that he only took 11 ticks. Guys, how much is 11 ticks on 2 contracts? That's half his goal for the day, isn't it? If he's looking for 250 a contract, guys, if he does this 3 times in a day, he's over goal. Doesn't have to be a high probability trend trade, but it has to be something that you've studied. It has to be something that is repeatable. It has to be something that has a set of rules that have been proven to win more than they lose. I guarantee Ron takes losers. I take losers. John Novak takes losers. Haven't met anybody that trades that doesn't take losers. Guys, I haven't met anyone that trades that doesn't break a rule every now and then. Back when I was younger and not so broken, I used to road race motorcycles, and there was an expert class and there was a novice class. And when I was a novice, I had one of the experts tell me, he said the only difference between an expert and a novice It's not lap times, it's how quickly you recover from a mistake. Guys, if you make a mistake, how quickly you recover is going to be huge. Mike, on 7 or 8? You're on 8, aren't you? Give me 1 second. I'm sending John a message. I think they're in the new workspaces. Jason had to go take care of something, so he's not available. So I'm going to go to my second level tech guy. So Mike, I admit this every day, and you know that I hate to admit it, but I do. I'm not a tech guy. I kind of stink at tech, right? You can reload the indicators, and it's going to be on your new ones. And then Rain is my tech guy in here. He says it's in the synth-fib indicator, which probably means if you go to your indicators and you go to the T3 synthetic, now that they're written in there, you're going to see the reversal marker 1, reversal marker 2, show reversals true, show all reversals false, show reversal of price true. And that should get you. Give it a look, Mike, and see if that's it. Turn second one on to true for all. Rain, I can't thank you enough that you jump in here and help me out with these every now and then. Guys, I was an English lit major. I can write you a haiku about reversal bar markers. I can find the symbolism, but I'm not a tech guy. But I'm pretty good at reading indicators. And I'm pretty good at teaching you guys to read indicators. So we'll do that. Not really, Finman. But guys, can I get a little hallelujah? That downtrend that absolutely railed from the termination condition at the top stopped cold at Fibonacci support. That's not normal. Because Finman, look, if we go back, the market typically fluctuates up and down, doesn't it? Creates opportunities in those fluctuations. Every now and then you get a straight run line. But that volatility, guys, that's how we make money. And sometimes you catch the big one. And sometimes it doesn't give an opportunity. Strong trending, take the mid-band and hold. Wow, that was a big move. Nice job, Paul. There's your week in one trade, right? Wouldn't that be amazing? But it wouldn't do you a darn bit of good if you don't know how to catch the trade, right? So, not normal. Not normal, but it happens sometimes. I think the thing I like is just how amazing, even with such an emotional market, how well Fibonacci works, guys. You have the advantage of knowing where the market is likely to go, where it's likely to top, and where it's likely to continue. Guys, this is just unbelievable. All you have to do is learn how to use it, guys. I had someone tell me once, every diet works as long as you follow the diet, right? But most of you guys have VCRs from 1987 where the date's still blinking on the front, right? Because you didn't want to follow the instructions. You didn't want to follow the rules. Jay Corey, what can I do for you? You've been trying to type in this room for the last 20 minutes. Fourth base hit, time to go live life. I love it. Jay Corey, you can do it before you pass. You can open multiple accounts anytime you want. Yeah. So no worries. Yeah, always ask. Man, we're here for you. And you know what's cool is John Novak knows that there's a lot of questions. And because there were, where did it go? Maybe he took it off. It was there yesterday. I'll have to find it. Apex is still 80% off. So what happens, Jay Corey, is you can even qualify on multiple accounts. I don't know why you'd pay that monthly rate to try and qualify 20 accounts. Why not just qualify one, prove to yourself that you can follow the rules? But if you're winning consistently, you can get that trade multiplier. You can go through, and whether you've passed the evaluation or not, you can do it. If you want to, if you know that you're where you need to be, pass 20 accounts, get in there, start making that money, or pass one to make sure, and then start adding accounts. And with that multiplier, you can go up to 20. And I think that they talk about it from their account page. There may be a section on the multiplier. Two chili dogs and a beer tab. That sounds like a perfect day, man. You know what? I almost took a picture of it for you too. I grilled hot dogs the other day. Had a blast. Guys, we're good. On the profit goal drawdown, it's on the account, Jay Corey. So if you're doing a $50,000 account, you have to make $3,000 to qualify. If you lose $2,500, what happens? Oh, bar tab, my bad. I'm not a pirate, I guess. I can't drink rum. If you hit that drawdown, then you've blown the account, right? You don't qualify. But Jay Corey, the thing to remember is, let's say that you have a $50,000 account, right? And you make $1,000. Your drawdown is now, instead of being 47,500, now your drawdown is at 48,500. It's a trailing account. Does that make sense? And then if you go up 1,000 in a trade, but you end up losing it for $100, but that account at one point of open equity was at 5,200. Now your trailing account is 49,500, right? Even though your account may only be at 5,100 now. So it's a trailing account from your highest point of equity. And they have a great video. Apex has a great video about the trailing. Let me see if I can find it. There's a great one on how to manage your risk. Evaluation, this master training course, guys, and they send it to you when you get it. What did you miss? No, you're okay. So Philly, you missed exactly what we talked about yesterday. The only difference is that there were different pictures to look at. And I'll do it again tomorrow, but check it out. If you go to YouTube and you go to live, today's class should be up there as soon as we're done today. It's not made available until class is done, but today's class will be recorded. You'll be able to access it straight from the streams page, and this will probably be up in the next hour or two. So you'll get that same reinforcement of rules from yesterday, but you'll also get to see real-world examples. And I'll tell you what, there was some phenomenal trading this morning from Nexgen traders taking rules-based trades and making money with them. So being able to see that the rules were met, being able to see that they were able to go through. Yeah, absolutely. And anytime you miss a class, don't panic. It literally is the same thing over and over. And it's that repetition that kind of gets you where you want to be. So, guys, with that said, that's it for me. Go enjoy your afternoon. Go get you a bar tab and a chili dog with Ron on the beach, if that's your thing. Study, do a little market replay, take some pictures, right? Bring them to class tomorrow. We'll talk about them. You do not have to take a picture in the live market of that day to get feedback on what you do. If you do market replay, bring me your pictures, right? If you're just scrolling through and you're like, I'm going to find termination conditions, I'm going to bring Mark 10 pictures of termination conditions to make sure that I understand. Guys, it's okay. That's what I'm here for. This classroom is your classroom. My job is to give you what you need. And I'm going to do that again tomorrow morning at 9 a.m. I hope everybody has an awesome afternoon. You guys take care and be good.